Hi all. Okay, so this particular video, I'm just going to get straight into what I've been asked really. I'm having a few DMs in terms of the Discord channel. I'm having a few messages via TradingView and so on. And I just wanted to kind of clarify because going back, realistically, all the way from January, you'll see what I put in the last post in the last couple of streams. In January, I was looking at the accumulation levels up. February, we were looking for the pullback move to the value area. The value area was actually hit, and then ultimately moving on up to the buyer's climax. Okay, so that was all based, and you go through my trading view profile. That was all based on I suppose the moves that led up to the rocket call, and the rocket call giving me the roadmap in terms of the grand scheme of things. Okay, so where we are and where I'm kind of seeing that we still are is there's not really that much that has changed going back from January realistically. Now from March onwards, I think the difference that I'm looking at, and the only thing that's really changed, I guess, in terms of the opinion right now, is potentially the target that I'd forecasted, and I'll come into this in a second. The target that I'd forecasted for the monthly three to be completed at, I'm probably going to drag that down a little bit based on this particular move up, right? And the low volume kind of limp move past the previous all-time high. Okay, so what I'll do is I'll just come into a couple of the posts just to show. So going back to this one, the reason that I titled this Not Ready Yet is that on a personal level, I'm looking for a monthly four buy-in with a monthly four buy and hold and ride the monthly five for a couple of months. If I'm going to tie up a decent chunk of capital, I'm actually going to be looking to sit on that with a high probability, low stress, and just take it and enjoy it rather than looking for something that I wasn't too comfortable with on these moves up, right? So coming through my posts, if you come into my trading view profile, you'll see I've gone into some depth in this. And I know Paul covers a lot of these things on his daily stream. So if you follow Paul or you don't follow Paul, it's probably worth a follow on trading view in terms of his, more frequent updates. For me, the plan is pretty much the same. I'm not looking to day trade this. This is a long buy and hold, and I'm comfortable with the current situation. Okay. So looking at the low volume, lack of volume on this move up coming back into the chart, you'll see the lack of volume there. There was a few things that I didn't like personally. So, assuming this was the weekly four, and you'll see this going back to the rocket call, which whatever I've actually covered the rocket call. I can't remember if it was this one or this one. Where were we to the rocket call? So you see the rocket call 18th of March. You'll see that the target area is, down around the 28k level there, center of the box. And then obviously moving on up now, if you zoom out a little bit here, you'll actually see that there was a five move in here somewhere. It might be a little bit zoomed out in there. Yeah, five over there. So I was anticipating that to happen, into next year. Okay, so this move happened a bit faster than I would have assumed. But you'll actually see, and I'll come into these in a second, you'll actually see that, it's done pretty much exactly as planned. There was 2K up here, which brought the 2K up there, which brought this 2K back there, which brought us down to the same value area because it was just the extension levels that I was keen on this. So first things first, if we assume that this was a monthly four and we're now coming up for the weekly four, coming up for the weekly five being a monthly three, I'm going to do the three a bit bigger. So a monthly three up and around this level. I didn't like this move there. This move I didn't like either because it was actually a five wave I could count in this. So we had a three and a five, which didn't really give me a lot of confidence for a 1-2 move within this, right? Now, if we take this level up and we go something like this, taking us to a three, a four, and a five, we can actually justify an ABC with perfect fibs there. We can actually justify decent fibs at a 1618 at this level there. So kind of ticks a box at this point, and therefore I have to assume that inside this move, this was actually the four, giving us then the move up to the five. So if we come inside of this and we go something like a 1-2, a 3, a 4, and a 5, this would actually complete for me a high level. Now, I've talked about this inside Discord and talked about this as a potential expanding flat at this particular point. I've looked at the options for a 1618 pullback there, given this obviously the 5. And the last thing that I'd mentioned a couple of weeks back was actually the symmetry in this particular move. And I've covered this in the last stream, the symmetry in these moves here and this potential play. Now, when we come down to this level, potentially we've taken out the requirement for a UTAD at this. And I was kind of half expecting, I think given Composite Man can be very evil at times, I kind of thought we might have had the UTAD and down. Kind of looks like we're only getting this kind of sideways move. You know, if we are still bullish on this full on, full out, you'd expect after taking out the previous all-time high to just shoot off. Now, we took out the high here and we took it out again and I've really gone nowhere other than down. Okay, so it's not giving me a lot of confidence for my buy and hold type of situation. So, you know, again, coming back all the way from January, you know, probably more March in terms of the roadmap situation, nothing's really changed. Okay, so I've talked about obviously why I didn't like some of the move up, why I wasn't comfortable and confident in this. You know, on the 24th of August, I covered, you know, buying this pullback. So if, you know, if some of you guys in the group wanted to take that, fine. It just wasn't for me. And I'm going to stick to my guns on that. You know, that's just not what I wanted. So obviously I've covered, like I said, from, you know, March, the roadmap. We were talking about this roadmap around here or there, being March, and then ultimately down, come into the value area. We've left the value area. And like I said at the start of this video, I think the only thing for me that I'm going to change is the depth and the shallow element of this. I think the value area has actually been dragged down. So again, something I've covered in a couple of streams. This is just more kind of covering old ground, I know. So obviously in terms of COT, I know I'm just kind of jumping in between things at the moment. I'm just trying to cover everything as to why I'm kind of happy with where I am and why I'm not looking at this being a major bull run just yet. Okay. I'm still bullish. I'm still confident that this will go, you know, up in the long run. It's just a question of, you know, guys that were talking about buying this at 60 plus, they currently sat in red P&Ls, and that's just not what I want, you know. And I think especially coming up to Christmas, I like the idea of taking some time off, you know, coming into the new year and being in a position where it's actually doing what you've said it's doing, especially over the last year. So I've been buying Bitcoin since 2011. I've been very, very lucky and fortunate in terms of getting in, getting out, you know, at the right times. A lot of it was down to pure luck in the early stages. I had a great run in 2017 with some altcoins. So I guess overall, just coming back to the COT, the way that I'm looking at this, and I guess the way that many newer traders will look at this, are definitely contrarian to each other. And I think what you've got to understand is when you're looking at leverage funds, which is what this particular chart is, when you're looking at the leverage funds in terms of COT, you're not looking at wrecked institutional traders when you see this chart, right? These guys are profit taking, right? These guys were buying in, you know, sub 5K levels. They've held their positions over years in some instances. And these guys have been selling off since the first all time, well, since just before the first all time, probably around 40K, 40K up. And again, I've covered this going back to January this year. So the position that we're currently in, right, is when you see a spike like this happening and the price is moving up technically against what this chart is showing, you've got to ask yourself the question, if retail are the guys buying with low volume, right, because these guys are not selling in large chunks, these guys are exiting $1 billion worth positions, right? Now, if these guys are the guys selling off, you have to look at this like a warehouse scenario. And again, I've covered this in multiple streams. These guys have come in and bought at wholesale prices, right? Prices below where majority of the retail crowd have actually got themselves into. There's going to be a few, you know, I'm one of the fortunate few. Now, ultimately, when you start looking at, just assume they've bought at 10K, right? Just for the argument's sake, for the proof of the example, they've bought at 10K and they start selling off at 40K, right? Now, they've made a decent return on that capital, right? Now, retail traders are coming in. You'll see bullish news. You'll see hype in the market. You'll see everybody talking about Bitcoin going to 200K. All it's doing is fueling the ability for these guys to sell off at now the retail prices. So they've bought it wholesale, they're selling at retail, and now they're selling at a premium in terms of retail. So this chart going up is not wrecked institutional. It's actually institutional profit taking. Now, when you see profit taking from an Elliott Wave perspective, the way that the profit taking happens is pretty much like this, right? You have a base, you come back down and test the base, you have a real nice run, which is why 3 is often the longest. Now, 4, you tend to have this type of movement out, and 5, right? So if we were to draw some kind of channel, there to there, you'll actually see majority of the time 4 will come out of this channel. It's in this channel that these guys are actually accumulating to go again, but actually hedging their positions and taking the profits all the way from down here and down here. Okay. So ultimately, what happens is you get the retail crowd buying past this particular point. You've got your mini waves inside this wave here. Now, ultimately, what you'll see is a fractal move inside this, and these guys will be buying in at this kind of level. So retail will be buying after the break of the 1. Institutional guys are already in down at this low. They've already done their accumulation. Ultimately, at this particular point, you've got retail buying the dip, and you've got profit taking from the institutional, which is what drives a kind of elongated 3 to 4 type move overall. Okay, so it's no more complex than that, really. Now, coming into the next couple of things, obviously we've covered now COT, we've covered the why we're not kind of ready. I'm going to come back all the way to February, March calls and why I was looking at the Wyckoff. I've actually written quite an in-depth piece on this. You'll actually see it was an editor's pick in terms of TradingView. We've had a lot of feedback, a lot of comments on this particular one, and I just wanted to cover why I was calling this. So again, coming back into January, I was looking at the accumulation, which was around this particular point on the chart in terms of Bitcoin. We had a value area, which is what I would regard here. We had a pullback down. I think this was around the 35, 36 level I was looking for. Then we come up to the buyer's climax, which is what I've just said in terms of COT. We've actually had now the institutional guys selling off, and in essence, we've actually had profit taking coming from that particular point. So we've had then this profit taken. Now you have to keep in mind the sheer size of the positions that these institutional traders, the leverage funds, will be taking are by the billion, right? So if these guys are trading by the billion, a lot of retail hype is required, and a lot of bag holders are needed for these guys to profit from where they are. Now, the next thing will be ultimately a decent drop. That drop will come in. That will allow the institutions to start accumulating again. But I think this is where the monthly and the weekly are very close in terms of chart. I'll finish off on that, right? This is something that's quite key in terms of the understanding. So obviously, if you don't follow me in terms of TradingView, don't follow Paul's daily streams, it's probably worth you looking through some of these posts, because we've got a lot of educational content. I've actually covered, I'll just show you this. I've actually covered quite a lot from the psychology, played around. There's some books and stuff to read, how to assess altcoins, buying the dips, and right the way down to the basics of moving average, trend lines, how to manage trades on multiple time frames. So there's a lot of information there that's freely available through TradingView. I've covered a lot of that, and you'll see all of this kind of in my profile. So if you are looking for this particular post, it was July the 8th on this one. So coming back to the Wyckoff side, what I was looking for when I called the rocket call was based on this particular move, giving us technically the UTAD. Now I assumed the B being ultimately the UTAD. I just didn't know how far that would go. Something into the future in terms of Bitcoin was definitely a hard one to call. So looking at what I was looking for, it was based on purely Wyckoff knowing that where we were on the Elliott roadmap was giving me the confidence that this was indeed the distribution phase rather than the accumulation phase. And a lot of people, when I posted the rocket call in particular, a lot of people were saying, oh, you're wrong, you know, this is definitely reaccumulation. And you could see as clear as day that it wasn't. You could see why all the logic kind of stacked up. Now, we've obviously got some Wyckoff tools and so on and so on, but this is just showing, you know, selling these positions from where we were, the sell me now, sell me now, sell me now. You know, clearly we were starting to curve around in this move here, right? We started to have some overbought situations in terms of the oscillators. We definitely had a extension in terms of Fibonacci. We had obviously the extension levels 3 for the Elliott Wave. So there was just too much to ignore as to why, you know, this was actually the distribution rather than the accumulation. Okay. So coming back to, in terms of what I've covered in the group in the last couple of months, in terms of Discord, I've actually covered everything from, if you wanted to buy, you know, around the pullback level for Bitcoin, you know, we pulled this out and called this. It wasn't for me. I'm still very much bearish in terms of the current sentiment. I'm not bearish as a whole, just bearish in the sentiment, right? And again, I'll cover this in a couple of seconds. It's hard to kind of jump back and forth in terms of the overall situation because ultimately there's a lot of information to cover, and I'm trying to condense it just to highlight, you know, why I'm confident in the situation where we are currently. Okay, so I've covered a lot of this in terms of these Discord posts. I've covered a lot of, you know, why, where, you know, what we are now. It's up to you guys to interpret this kind of as you want. I know Paul does a really good job translating some of what I say, but a lot of this information is kind of mapped out, and that's obviously what we try to cover. So, for example, this particular one, the 30th of September, you know, you can see this high level here, right? Now, this is based on some kind of clustering technique, something that we do teach, you know, in Discord. There's a couple of videos on this. And the general idea for me is if you're going to break this all-time high, which was the previous all-time high, right? And this, you can zoom in, this is not actually on the all-time high, it's just above. So if you're going to break an all-time high, you'd actually expect momentum to see you through to new all-time highs and, you know, almost kind of keep on going. And I think the fact that we had this low volume move up, right, it kind of, again, just reiterated that we weren't ready to take off just yet, right? Now, you can see that from the 30th of September all the way through to the 15th of November, we come up and practically to the pip, you know, we kind of closed this candle out all the way back down, come back up. Now we faked out through it, you know, taking a kind of a stop loss type hunt, anybody that did want to short it. And all we've done right now is dropped again. Now on a smaller fractal, we've come down, we've come back up, and it's almost clear as day in terms of where we are. That doesn't scream bullish intent in the grand scheme of things. Now, that coupled with COT data, the fact that this is a controlled mechanism of profit taking at what I would assume being now a monthly 3 situation, everything is kind of stacked up for where we currently are, you know, in this as a situation. So I'm going to kind of stand by what I've said back from January, February, March into these positions of the weekly situation, the roadmap, and so on, so on. So let's have a look. So pullback level. So for August, so that pullback, like I said, I was calling around the 24th of August. These were actually the target areas. You can see that we've kind of sat inside this range. There's actually some open liquidity down here. So again, I'm going to keep my eye open for that in terms of the monthly move back down 4. What else do we have? So there's a couple of key levels. I'm not going to go into all of this kind of stuff. So that's the interesting level in the group. You can see we've kind of rejected from the level that I was forecasting in September. I'm happy with the call. You can see it's pretty much to the pip, you know, here and there. We had a bit of a fake out stop loss hunt on the middle one. Back to August, the channel played out, you know, absolutely perfectly. We come up, we've tagged, we've kind of had this now ascending, move down, we've broken through. I would like to see another retest. So again, maybe up to 62, maybe 64 at the push. And actually, I've covered that. So I'm going to come up to these. I've covered the B pullback option. So I'm going to get rid of the channel and pull back the options for the B. if we were to go really deep based on the move actually from here to there, then I think ultimately we're going to come up a little bit higher. If we base the 5 on this rather than this being the 5, then actually we'd actually come down a little bit lower. So I think 63, so the middle ground for me is around 64k. I would expect a bit of a dart up and then ultimately an overall drop. Now, there's a couple of other interesting things that we've seen in this. And actually, one of the guys in the Discord has actually just finished a book that I'd suggested and asked me a couple of questions on something, a technique that I haven't used for many, many years. So this is actually to do with Nye angles. A guy called Richard Nye, who had actually written a couple of really, really interesting books to do with market makers or what they regard as specialists in the stock exchange. So you'll actually see that if I was to take and split this down the middle, there to the low, more or less there. So you'll actually see that from the low there, the angles that we've actually got here, and there's a few techniques, again, I'm not going to go into the actual ins and outs of this, there's a few techniques to understand why you'd use these particular angles. And then what you'll see is that kind of moving forward, you'll actually see that these angles were used from the move down back into the move up, okay? So the move up, look, you can see that these were actually used for support on this. We've actually used this as support most of the way through. Again, support most of the way through. So again, we kind of know where we're ultimately heading, and very, very useful kind of technique. So I'll probably start using this one again, actually. And so thanks, Rodney, for this one. Then we've got, what else we've got? So we've got the updated. So this was based on what I was calling as a UTAD, probably back a month or so ago now. I spoke to Paul. I know Paul didn't really like the idea of this UTAD. I think looking at this, the fact that we've broken through this channel would make me feel that we're less likely to have this UTAD. So as you can see, this was actually my March forecast with a view of going 3, 4, 5. I think with the low volume that we've had, profit taking still underway in terms of COT. I kind of like the idea of coming back to revisit the value area at the very minimum in terms of the situation. Then we'll reassess the situation, where we go. If we do come on up and we break these highs in the current circumstance, I think the absolute maximum for me is now only 83k, and we're more likely to tag 72, 73, maybe with a little bit of hype. So again, nothing's really changed in terms of the situation. We've got the corrective idea. So I've covered this one in the channel more recently. Let's flick on down to here. Where were we to? This one here. On the 18th of November, I was looking at the move coming on down for A, back up for B, and then potentially down for the C, which would take me back into that value area. Now, as you can see, we've done exactly that. We've come down to the A, we've bounced off the A, we're now potentially on the way back up for the B, and then ultimately a move on back down, I feel personally. So that's the only real updates that I've got in terms of the current situation. This was actually the UTAD move that I was anticipating. We've actually come on straight down. What else do we have? Symmetry. So this was potentially the ABC move. We've still got room for a 3. I'm not going to rule that out just yet. It's getting less likely by the day, as obviously the stochastic moves on up daily, and basically is putting us in a position where the price is kind of grinding sideways, yet the stochastic is moving up into the overbought situation. And again, that's something that I think we can obviously come on down. So what's this one? This is on the 15th of October. So this was just the Elliott count up for the weekly 5 that I actually had. And as you can see, we tagged these regions. We didn't quite get as high as the max level, which is again the 73, 73 and a half. We didn't actually get up to the 5th of the 5th, being the 4, 6 and 8. So we've tagged this liquidity box up and around this level, and we've rejected from it nicely. We've broken through the channel. So yeah, I'd like to see some kind of retest still, and then I think the retest to a drop. given the stochastic, as I just mentioned, given the stochastic situation, I think the longer this goes sideways, the more potential we have for the dump. Fear is going to set in terms of the retail. We coming up to Christmas, and regardless of what these YouTube guys and Instagram channels are all talking about in terms of diamond hands and hold this, and when you see a P&L and it's red 20%, 30%, 40% of your account balance, you've sold your sofa to ultimately buy Bitcoin. I think you're going to start to feel a bit of fear in that situation. 20% drop, you've kind of put your life savings onto this move. I think you're going to get a lot of sell-offs regardless of how confident some of these people are. I think they're all great in terms of the social media posts. They're all keyboard warriors in the grand scheme of things. And I think ultimately, when it really comes down to it, you've got to ask yourself this: if we are going to take this to just double where we are right now, if we go up to just over 100K, we've actually got to add near enough $1 trillion to this market cap for it to do that. Let's ask, who's bringing that kind of money this side of Christmas? Yeah. And that's really where we are in the grand scheme of things. Now, this isn't just Bitcoin, this is across the board for crypto. I am bullish overall, as I keep reiterating. I think for me, it's just a question of knowing where we are in the roadmap. Again, quite similarly, I've covered this going back. Even may look for the Ethereum count. If we come into Ethereum, just to finish off on this isn't just Bitcoin. Let's come across to Ethereum. If we look at where we are on the Ethereum call on a daily, what have we actually done on this? We've actually done no different than what I was looking at all the way back from this move here. So this one there, you can see it drawn on May the 22nd. 1, 2, 3, 4, 5 count. 1, 2, 3, 4. We've up for 5. It's kind of doing what you'd expect it to do. There's nothing different, nothing shocking, nothing untoward. It's doing what you expect it to do. So I know many day traders just want in and out, and they want little positions. They want to take this, $300 move here and $200 move there, especially when it comes to Bitcoin. I think ultimately, guys, this is the kind of trading that I like doing. This is the kind of thing that I like for the long run. I'd rather be buying in and around, the 2K level and doubling up on the money, a couple of months later. That's the kind of trade that you want, rather than using leverage and trying to catch, $100, $200 moves in every little swing. The market for me is too volatile right now for any form of consistency. And I think as a professional trader, I've done this 20 odd years. As a professional trader, the general idea is to take higher probability, lower risk, manage the risk kind of efficiently, effectively, and ultimately take these trades with a high degree of confidence. That's what's kind of kept me in the game. It's just, it's just what kind of pays the bills, and ultimately that's kind of the point. So I think, overall, if if you're looking to take this serious and to do this as a commitment for, a living, then ultimately you've got to stop thinking of the high leverage. $100 into $1 million is, it's possible, but it's not realistic and not for everybody. There's a high degree of risk with this. Now, although you can strike it lucky, you could also strike it like if you bought a lottery ticket. So I think the thing is, you have to differentiate between, are you looking to trade this, or are you a long-term investor, or are you looking for the punt that ultimately will be, the life-changing experience with a couple of grand into one lucky trade that makes you a lot. If that's the case, then, good luck in the altcoin market. But I guess if you're looking to trade this kind of professionally, then understanding where you are on the roadmap is a very good place to start. So yeah, I hope you enjoyed this update, and yeah, I hope I've covered everything. It makes a bit of sense, and you guys have enjoyed what I've had to say. So sorry for jumping from topic to topic and space to space, but I've tried to cover more or less everything. If you don't understand certain parts, I think you should be following Paul's daily streams. If you're not sure on some of the techniques and the tactics, come and join us in Discord, or ultimately, follow us on TradingView. And it is a lot of obviously free content, free educational content that we've put out on TradingView, especially in the last couple of months. So yeah, I hope obviously I'll be doing another couple of updates before Christmas, but unless anything really drastically changes, this is pretty much my opinion. This is what it is. It kind of stayed the same. Nothing's really altered since March, and I'm sticking to my gun. So yeah, if if you don't watch any more of my videos, then obviously have a great Christmas, and we'll see you in the new year.